Hey Desert Life family, so today we will discuss what's happening in the Phoenix housing market, and this will probably be my last market update for the year. Like, can you believe it is December already? Man, time has surely flown by. Before we get into all of the data, let's quickly talk about interest rates. Now, we saw interest rates jump to over 7% about a month ago, and then earlier last week, mortgage rates dropped to about 6.4%. Now, this may not seem like a lot, but it's a couple hundreds of dollars difference in a mortgage payment, which could be significant for some of us. But if you're waiting for interest rates to go back down to like 2 to 3%, don't hold your breath. The chances of rates being that low again are extremely unlikely. Now, real estate is, as you probably know, the ultimate wealth builder. And if you want to buy right now and you happen to do so at the current rate, don't forget that refinancing when rates are lower is always an option. Never forget that you always have options, okay? 2020 and 2021 were anomalous years as it relates to the housing market and probably other areas too. And now what we're experiencing in the economy today, like inflation, high interest rates, shortages, all of that is partly a result of decisions made during those years. Now, I'm sure you've seen the many different headlines that are actually conflicting, like the housing market is going to crash, we're in a bubble, it won't crash. Then you have like the other headlines about a technical recession, a global recession is on the horizon, all of this stuff, right? It can be very confusing, but the way I see it is that it really depends on the Fed's response and how inflation moves. Now, we are anticipating the Feds to raise rates a little bit this upcoming week, so we'll get some more insight on how this will affect interest rates. But what will it look like in the second or third quarter of next year? We can only find ourselves possibly in a constant space where it's the status quo, or inflation can start to decrease and we'll see a moderate impact, or inflation will increase and things will get worse. Honestly, we can just really speculate at this point all we want, but we won't know it until it actually happens. The bottom line is to prepare. Like I've said this plenty of times in my other videos, get your finances in order and have an emergency savings account. Pay off your debt. If you can get it to a zero debt balance, that would be ideal. If not, then get it down to the lowest amount you possibly can. Now, this is not financial advice, but I believe that it's better to have it and not need it than to need it and not have it. All right, so let's talk about what's happening in the Phoenix housing market. Phoenix is still growing. TSMC, Taiwan Semiconductor manufacturing company, may be expanding in Phoenix. Now, the rumor mill is that TSMC is planning a multi-billion-dollar expansion in North Phoenix, in addition to what it's already planning to build. Another semiconductor company, KPTC, is planning to have a facility built in Casa Grande, which is about an hour south of Phoenix. This is set to open in 2025. And according to the Greater Phoenix Economic Council, there are about 61 international businesses looking to possibly make Phoenix their home. So this is great news for the Phoenix economy. Now, it should be no surprise that demand has slowed down. It is typically slow this time of the year anyway, but then when you factor in interest rates, that further decreases demand. And let me just add that when mortgage rates go down, we can typically see, or we can expect to see, an increase in demand, which in turn will increase home prices. So it is really a good time to buy because there's very little competition, and I emphasize very, and you have more negotiation power or negotiating power as a buyer. It's just something to think about, okay, if you are on the fence of buying. Now, as of 12/3/22, the monthly appreciation rate in the Phoenix market was 1.8%, which is an 87% decrease year over year. Now, I know that seems very dramatic, but you have to keep in mind, as I stated earlier, the past few years were not normal. This time last year, the monthly appreciation rate was 27.3%. So just so you can understand this further, the annual appreciation rate in December 2019, which was pre-pandemic, was 6.3%. Now, the national average was about 3.8%. Then in December of 2021, it was 25.2%. Now, I believe we will see the appreciation rate continue to decelerate over the next several months. The number of active listings are down 7% month over month, but up 95% year over year. This means we have more inventory than last year, which buyers have more of a selection. Days on market are up 15% month over month and up 56% year over year. We are seeing listings stay on the market longer. Now, houses are taking longer to sell. But in all honesty, in a normal market, it could take a house like 1 to 2 months to sell. So what we are experiencing today is typical in a normal market. We are also noticing the rate at which homes or listings go from active to closed is down. The listing success rate in the Phoenix market is down 3% month over month and down 31% year over year. Again, I believe this is normalizing as well. In 2019, the listing success rate was about 77%, and now today it is 62%. It is lower now than it was back in 2019, but it's really nothing to be alarmed about right now. The monthly average sales price is $544,109, which is a 46% decrease month over month, but it has increased 14% year over year, okay? This data is really just supporting a normalizing market. There's really no alarm bells ringing right now in the Phoenix market. It is overall a healthy market, and as stated earlier, the valley is still growing. Now, if you have any questions about the Phoenix market, or maybe you want to buy or sell in the Phoenix market, drop me a line. I would love for us to chat. Just see that link below. I'm Renee, the Realtor. As always, thanks for tuning in, and we will see you next time.